Hello everyone, welcome back to 5% Trader. In earlier session, what we discussed is that the difference between equity and derivative, right? That's what we discussed earlier. As we can see that equities, these two instruments like equity and derivatives are very much important when it comes to the trading. So that which one to choose for a trading, we will discuss in a further sessions. But so there are a few more understanding that we need to have right now about equity and derivative. That's why I want to show few things about equity and derivative, then we will move on. Okay, so yes, for example, I will take for example, once for example, I will type something like this. Please observe this on a screen which is coming right now. So as you can see here, I'm typing something. For example, mm, if I take like this. Okay, what is this company? ACC, right? So if I click on this ACC right now, so you can see here, this is equity market, right? This is the equity market as I'm hovering over my mouse, and after that we can see on the corner, you can see derivative. If I click on that, derivatives price will be open. So that means equity is 1605. If I click on derivative, and if I select the contract, the current month contract, so current month contract means whichever the right now we are in. Right now we are in a 25th February contract till that time. Okay, so how much it is? 1612. There is a difference between equity and derivative price. That little bit difference will be there. We have to keep eye on that. Okay, and one more thing is that, so look at equity, ACC equity and ACC derivative. If I go back and check something like Canara Bank. If I take Canara Bank here, as you can see here, look at this. This is equity, and if I go here in the corner, look at the get derivatives, right? That means ACC is having equity and Canada derivative section, and this Canara Bank is also is having equity and derivative section. One more stock to finish off this. One more, okay, to give a conclusion. What I'm coming to say, so here Infosys, I'm taking Infosys, and this is the equity segment as we can see, and this is the derivative segment. Okay, all the three stock we checked, we have equity and derivative. What if I for example, if I take like mm, look at this, some company ABB, right? So if I take like this, look at this. What is this equity segment ABB, and what about derivative? Right, it's really suddenly surprises you, right? So we have checked almost three stocks. We have equity segment and the derivative segment, but for ABB we don't have a derivative segment over there, right? What it is really indicating you, please think about it. Okay, please pause this and think about it. What is really indicating? So what it is indicating is that, so I'm leaving you for to think. Please take a pause and after that continue. Okay, so if you know what I'm coming to say here, not all the stocks are tradable in derivative market. You have to remember that. Okay, around nearly 5 to 6,000 stocks are there in NSE. That means all the 5 to 6,000 stocks are not tradable in derivative market. Always remember, you can write it somewhere also. Okay, you can watch it couple of times this video. Around 150 plus stocks are being traded in derivative market. Earlier month it was around 200 plus, I think, something like that, a few months back. So now it is probably 150 plus stocks we are having in a derivative market. Only these 150 stocks are being traded in a derivative market. All the remaining stocks are not trading in a derivative market. That means these 150 plus stocks, what I'm talking about, these companies are having a contracts, lot size, okay, expiry date, everything what I mentioned about the characteristic, right? So and the margin, all these facilities will be available in these stocks. Okay, these are trading in a derivative market. In a contracts, they are trading 150 plus stocks. Please keep that in mind. Okay, so and one more thing, the second thing. Okay, so and always I will tell you, when it come to the contracts, okay, please always trade in a current month contract. For example, if I take this ACC here, if I go to the derivative market, derivative, if I click here, let's take this is the current month contract, is not updated yet. Tomorrow it will, Monday it will update. So for example, if I update this, so as you can see, if you trade in current month contract, look at this. the quantity wise, look at this quantity, for example, total quantity, look at this, like 1 lakh, something like 26,500. Observe these numbers, okay. Traded volume, okay. And also, observe this traded volume, okay. If I go back to the further month contract, March, okay, if I click on that, March, I'm going to upgrade that. Uh, Look at this trade volume. How much you see here? 4. That means if you trade in a further month contracts, there will be a no volume. Volume means there is not lot of people are there in that contract. Look at this. This contract, there is nobody is there. Still, it is not trading it. Okay. So as you can see, that's why I always tell you to trade in the present month contract, because you will not get a buyers and sellers in a later contracts. Somebody asks, like, sir, can I buy April month contract now, March month, and I can wait for 2 months? Yes, you can do that, but always we have to remember that there will be no liquidity in that. You have to remember that. That is the second point. And the third point which I'm coming to tell you here is, let me put this here, like for example, if I type here, what is I'm typing right now? Nifty. And please observe where I am typing, in equity tab. Look at that in orange color tab, equity. Mouse is hovering over, right? So in equity tab, I am typing Nifty. And please have a look at this. And on the right corner, you can see that is Nifty is available or not. Please let me know. Nifty, if you see in the right corner, I'm talking about this. For example, if I take this, give me a time here. So I'll paste here, over here. So that what I'm talking about here. Look at this. Here, please have a look at here. Can you see any Nifty over there? No, Nifty 50, anything can you see? No. Next 50, all those things I'm not interested. I'm interested only Nifty. Nifty is not there over. Okay. That is the one thing. And if I type, for example, Nifty Bank, can you see a Nifty Bank on the right side again? No. Right? So look at that. Then where I am typing in equity, right? So what I will do, I will switch over to derivative market. Now if I type Nifty, okay, is it available on the right side? Perfectly available on the right side. As you can see, if I click, Nifty will open. If I type Nifty Bank, can you see Bank Nifty or Nifty Bank over there? So for the Bank Nifty index, Nifty Bank index, another name is a Bank Nifty. Okay, we have to remember that Bank Nifty. Always we have to call that. Bank Nifty is available. Yes. Then what did you understood from this? Take a moment and think. When I put this Nifty and Nifty Bank, which are available in equity segment, but they are not available in derivative segment. What is the difference? Did you observe? Okay. And I'm asking you a question. What is the basic difference between these, what is the Nifty and Nifty Bank basically? Think about what is the basic of Nifty Bank. Nifty and Nifty Bank are the indices. They are not a stocks. Remember, they are indices. That's why they are not trading in a equity market. They always trade in all the indices. The third point, please make note of it. All the indices are tradable in derivative market. Okay, if I click on equity derivative, here you can see, if I click on Nifty Bank, if it is trading in a derivative market, all these indices will have a lot size. You have to remember that too. If I take this, for example, where it is not showing yet, okay, because market is not opened yet, so it will open. For example, if I take anything like that, I can see the it's not yet opened, right? Bank Nifty. That's why Nifty I can check. I think 1 minute. I will take equity derivative. I will take Nifty is also index, right? All the point which I'm coming to show you is that all the indices are not tradable in equity market. All the indices are tradable in which market? Derivative market. That is what you have to remember, which is not available right now. That's fine. But if I put any, for example, if I go back here, that is it's not updated yet because it is holiday, I think. So if I go back to index, and if I take any index, for example, so here we can see that index Nifty Bank, Nifty Auto. Let's take Nifty Auto. So here Nifty Auto, it's not showing yet, right? Nifty Auto, it should show actually. So it is showing the whole index actually. So I want to see the price. So that's what. Actually, the lot size will be there for each and every India. Just remember that one. In a future coming videos, I will show you. This is nothing but what I'm coming to say. Write down the point that all the indices, whatever Nifty, Auto, Nifty, Bank, Nifty 80, Nifty Pharma, Nifty FMCG, all those are not tradable in equity market. Only they are tradable in derivative market. You have to remember these few points. This is little bit more understanding of equity market. Okay. And one more thing. Okay. So just remember this one. In the next session, we will dive into the something called market turnover. This turnover concepts and all understand, and also will understand what is the role of brokers here. Okay. So yes, thank you.